Picture watching your $15,000 investment climb to $60 million. Your heart races, your hands shake as you stare at the screen. Then, a red candlestick, a price bar showing the market dropped, crashes down. Panic hits. Most people would react on impulse, buy, sell, anything to feel in control. But Takashi Kotegawa didn't. Instead, he calmly noted the chart's movement. He leaned into the chaos. What's interesting? This scene shows a powerful trading secret: staying calm when prices swing wildly. So what keeps one trader steady while others spiral? Your heart's racing. You're staring at a screen, and the red bars just keep stacking up. It's that moment every trader dreads, watching your potential gains evaporate in a sea of red. You're not alone. Many traders face this and react with anger, much like finding yourself in a heated argument. The frustration builds, logic fades, and suddenly you're making decisions based on emotion rather than reason. Think about a time when you were angry and said something you later regretted. Trading in anger is similar. Your judgment gets clouded. What seemed like a clear strategy becomes murky. The impulse to act, to do something, anything, to reclaim control, overwhelms the logical part of your brain. In trading, this often manifests as revenge trading, taking a bigger risk right after a loss to try to recover quickly. Imagine a weekly red candlestick chart on your screen, plummeting without mercy. It's easy to feel like you need to chase the loss, to dive back in and make it right. But this is where the real challenge begins. Anger doesn't just affect your mood. It hijacks your decision-making process. Let's break down why this happens. When you're angry, your body releases adrenaline. It's a primal response, readying you for fight or flight. But in trading, this heightened state can cause you to overlook crucial details, like market conditions or your preset trading plan. The key here is recognizing the anger, acknowledging its presence, and consciously stepping back. This isn't just about avoiding losses. It's about maintaining a clear headspace that allows you to make informed decisions. The next time you feel anger creeping in, consider it a sign to pause. We'll explore how to implement a pause effectively later. But first, ask yourself, is this decision driven by strategy or emotion? Your phone buzzes with a notification. You glance at the screen and see your trade has tanked overnight. An hourly price chart shows a steep drop. Your mind races with options: sell now, hold on, or even double down to recover losses. This is where the 24-hour rule becomes essential. The 24-hour rule is a simple yet effective strategy to combat emotional trading. When a trade goes against you, instead of reacting immediately, you take a 24-hour pause. This break allows your emotions to settle, giving you the clarity needed to make rational decisions. Here's how it works. First, when you notice a losing trade, resist the urge to act impulsively. Close your trading platform, step away from the screen, and take a deep breath. This mental reset is crucial in reducing the impact of anger and frustration on your decision-making. Next, use this time to evaluate the situation objectively. Review the reasons you entered the trade initially. Has the fundamental thesis changed, or is this just normal market fluctuation? Consider your initial stop-loss strategy. Was it set based on logic or emotion? Finally, revisit the trade after 24 hours. With a fresh perspective, you'll likely find that your emotions have cooled and your judgment is sharper. This approach not only minimizes revenge trading, but also enhances your overall trading discipline. Implementing the 24-hour rule can transform how you handle setbacks, turning potential emotional pitfalls into opportunities for reflection and learning. But what happens when you do make decisions in haste? That's the critical difference we'll explore next. Picture a crossroads. On one side, you're calm. You're looking at your options with a clear head. On the other side, you're angry. You're ready to react without thinking. Which path leads to better trades? Let's break it down. When you're calm, your mind is open to logic and strategy. You weigh the risks and rewards. You think about your exit plan and position size, how much money you put into one trade. This is what traders call having an edge, a small statistical advantage that pays off over time. By keeping cool, you stick to your plan. You make decisions with the long term in mind. But when anger takes over, everything shifts. Same scenario, but now you're seeing red. Your last trade went south, and you want it back fast. You ignore your original plan. This is emotional trading. It's a trap. Your decisions get driven by revenge, not reason. You're not thinking about position size or your exit. You're thinking about getting even. What's interesting, calm traders see a chance to learn and adjust. Angry traders see only a chance to claw back losses. The first opens doors. The second often leads to deeper losses. So ask yourself, which trader do you want to be? The one who breathes and assesses, or the one who dives back in, fueled by emotion? The choice is yours, and the impact on your account is real. Next, we'll see how Takashi Kotegawa mastered this balance, turning discipline into massive success. Picture a trader's desk. On it, a notepad with scribbled notes titled Kotegawa's Trades. It's not just any notepad. It's proof of discipline, a roadmap to how Takashi Kotegawa turned $15,000 into $60 million. Kotegawa didn't let emotions drive his decisions. When markets swing wildly, many traders fall into revenge trading, making bigger, riskier trades after a loss to try to win the money back. But Kotegawa stayed calm, even when facing big losses. Here's a specific example. Picture a moment where his screen shows a sharp drop in a stock he owns. Many traders would panic. They'd think about the money slipping away. Kotegawa saw it differently. Instead of reacting on impulse, he reached for his notepad. He reviewed past trades. He noted what worked and what didn't. He focused on his strategy and reminded himself of the long-term plan. This isn't just looking back. It's how you stay grounded. By focusing on strategy instead of emotion, he avoided revenge trading. Think about the discipline that takes. The market is shouting at you to act. For Kotegawa, it wasn't about the hit to his portfolio. It was about keeping a clear head and sticking to his rules. This let him spot new setups others missed. Other traders were blinded by recent losses. Instead of piling more money into a losing position, he waited for trades that fit his criteria. Here's where it gets interesting. Kotegawa didn't shrug off losses. He used them as a learning tool. Each loss got broken down, understood, and folded into his strategy. Every setback became a stepping stone. It reinforced patience and careful decision-making. His story is a reminder. Discipline isn't about killing emotions. It's about managing them. Step back, take a breath, make decisions based on strategy, not fear or frustration. So think about your own trading. How can you build this kind of discipline into your strategy? What steps can you take so your emotions don't drive your trades? The lessons from Kotegawa's discipline can guide you. They can help turn emotional reactions into strategic decisions. Up next, we'll break down the 24-hour rule, a key habit Kotegawa and other successful traders use to stay disciplined. Why do calm traders often beat emotional ones? It comes down to emotional control, and the 24-hour rule is a simple tool that helps. Here's how it works. After a big loss or a heated trading session, step away from the screens for a full day. This break lets your emotions cool down. It prevents emotional trading, making trades driven by fear, excitement, or ego, not a plan. The pause isn't just about avoiding rash decisions. It gives your mind space to process things clearly. Traders like Takashi Kotegawa have mastered this. They resist the urge to jump back in and win it back right away. When you use the 24-hour rule, you give yourself that same edge. Quick aside, if you're finding this useful, hit subscribe. We get into trading psychology twice a week. So next time you're tempted to chase losses or act on impulse, remember this. Stepping away can be your smartest move. The discipline to wait is often what separates steady winners from emotional wrecks. Want to know how to build this into your routine? Let's get into that next. As we wrap up, remember this. Trading success isn't just about strategy. It's about mindset, how you think and feel while making decisions. If these ideas helped you, hit subscribe and stick around. We drop fresh takes on trading psychology every week. Until next time, keep your emotions in check. Keep your decisions steady. Here's to your path toward becoming a disciplined trader. See you in the next video.